Turning out to be a day where we are seeing follow-on buying after the recovery that we saw from yesterday's intraday trade. So currently the Nifty is at around 10,651, and if you just want to make that tally, it's over 300 points in terms of a recovery from the low of 10,333 that we had hit in yesterday's trading session. Mid-caps are outperforming again, so the mid-cap index is up around 1.5% as we speak. Almost 2% at this point in time. A lot of stocks in focus, and especially the banking and financial space. India Bulls Housing Finance up 4%. We have Yes Bank, which is rallying ahead of its board meet tomorrow. So that stock is in focus. Dr. Reddy's low point of the day on account of Suboxone, and a couple of these PSU banks really taking your breath away in today's trading session. Central Bank of India, Bank of Baroda, just a few to name at this point in time. Obviously, it is that new RBI governor rally which is probably fueling a couple of these stocks.
But I'm morning, Ekta. I'm a little puzzled in terms of why is the market rallying. I mean, what is the reason? I mean, you consider factors one by one, right? I mean, globally things are looking a bit fragile. There is no clarity on where this US-China thing is going. I mean, there is no clarity per se, right? And markets don't like lack of clarity. And the Fed is, global growth is slowing. You can see that from the Fed commentary, which is saying that maybe we are close to a neutral rate. So their estimation is that growth in the US and global growth will slow down going into 2019. And I think most people recognize that. So that is global. Locally, the state election results are what they are. Everybody, I think most market people would have been pleased with a positive BJP outcome, which is not the case. I mean, it's actually diametrically opposite, correct? The RBI, I mean, the last 24, 48 hours have been absolutely frantic, right? Mayhem. One governor has quit, the other one has come in. And of course, I mean, the other
FIIs pulled out money yesterday as well. I think it's one of the largest FII outflow figures of over 2,000 crores.
Correct. And then you add to the backdrop, which is actually not all that great, which is earnings growth is still by and large missing. People say F5 20% growth again, but that's always true for 1 year forward. Estimates always look rosy, but earnings growth is still looking pretty, revival is not looking, it's looking like it's around the corner. And, I'm being told that flows into mutual funds in December so far are not all that great. They were still okay in the month of... They were down 30% in November compared to October, but December is actually turning out to be a bit more problematic. So, this rally, frankly, baffles me a little bit. So...
And you heard of the Santa rally, right?
You get a year-end rally and all of that, but in this kind of a mix, right? Yeah. I mean, it seems a little... I mean, I would be a little suspicious and wary of, being gung-ho and going long, etc. I mean, that kind of a stuff. I would be, frankly, a bit wary.
Okay, well, yes, we have corrected all the way from levels of over 10,900 just in the past couple of trading sessions. So, yes, we have probably seen a little bit of an up move coming in because of the kind of bottoms that the market has made just in this week itself. But nonetheless, let's get talking about the technicals of the market. We have Mitesh Thakkar joining in for that. Mitesh, hi, morning, over to you. What's your recommendation, Nifty as well as stocks?
Good morning. Good morning, Ekta, and good morning, Prashant. I think... I was just listening to Prashant saying that he'll be wary of trading on the long side. I think that's a fair assumption. You've seen markets possibly showing strong moves on one side and then fizzling out after about a day or day and a half of action. We saw that with the declining move earlier. We saw that with the rising move when it reached 10,900 after a good consolidation around 10,700 mark, and then broke the 200 average, hit 10,950 and then immediately fizzled out. So I think it's been slightly more choppy, it's been slightly more volatile if you look at the overall intraday movement of the last 2 weeks. So trading does become difficult, but I think the good setup in this market is that a lot of stocks with this decline in the last few days are reversing from extremely oversold levels. So maybe you would want to bet over there. On the indices, I think Nifty would find a lot of strong supply coming closer to about 10,700, 750 zones, and we are not very far away from that. There are important averages around the 10,700 mark, the 200 averages at 10,750, and there's a falling gap. So this 50-point band would be extremely difficult to get past for the Nifty immediately. My sense is that we will be in a choppy range of about 10,400, 350 to roughly about 10,700, 750 for the next 1.5 weeks.
Okay, did you give us your stock-specific strategies, Mitesh?
That's right. So I have 2 calls. Federal Bank is a buy. Keep a stop at about 84. Look for targets close to about 90. And Dabur is a buy. Disclaimer here: it's a recommendation as well as I have a personal position there. That's a buy with a stop at 415 for targets of 437.
Okay, well, we have a couple of Twitter queries for you now, Mitesh. So let's get going on that. Ravi Dharan wants to know whether it's a good time to buy Yes Bank. Everybody wants to know that.
That's right. I think the stock has fallen from nearly 400 levels to as low as about 150, and then has tried to find some base. So I think, typically one good thing which has happened is that after that big decline from levels of 350, 360, when this news of Mr. Kapoor first broke out not getting an extension, I think now we are seeing the stock being very choppy, but broadly not making fresh lows immediately. So I think these are times where the stock will possibly do some base building and prepare itself for medium-term reversal. The idea should be to slowly accumulate. I would buy 25-30% right now on a 10% decline, add another 25-30%, and in case I'm lucky enough to get another 10% decline, add the entire quantity. So you should be trying to accumulate the stock over here. The signs on the longer term indicators are of bottoming out, but we haven't got a proper reversal as yet. But I think good times to accumulate, and in a year and a half, I think the stock should be clearly trading more closer to or even higher to levels of around 240, 250 to begin with. In case something positive comes in, 280 also can be tested.
Okay, Mitesh, thank you very much for your time. Appreciate you joining in with that perspective. Take a look at what's happening on the indices. 107 points on the Nifty. And, I just want to look at sectors, pockets of the top gainers, basically. The auto index comes up 2 3/4% higher on the auto index, the Nifty auto, basically. The real estate index is up about 2 3/4. It's the second best performing index today. The metals index is up about 2%. And then the small cap index, PSU bank index, all in the 2% range. So there is, a broad sort of move which we are seeing at this point. We had that question on Yes Bank coming in, and the story that we are putting out is with regards to Yes Bank. The low late November for Yes Bank was 147 rupees. From 147 rupees, it got to about 183 or odd, and then it sold off once again to about 160. It's back there. It's back to the recent trend high, which is the 183, 185 zone. So in that sense, even technically, this is, around here, it's an important zone. News flow is also going to heat up for Yes Bank over the next 24 odd hours or so. We understand that the Search and Selection Committee is going to hold a meeting today to shortlist the candidates for CEO position. And of course, then we have the board meet itself tomorrow. Ritu Singh is here with those details. Ritu, morning.
Morning, Prashant. Well, yes, as you said, the next 24 hours are going to be crucial, although the names may not immediately be made public. But yes, the Search and Selection Committee will be meeting today for the final shortlist of 3 candidates that will then be sent to the board for their approval before RBI picks one of those names to succeed Rana Kapoor as the next MD and CEO when he vacates his office at the end of January next year. We do understand currently there's a pool of 5 candidates that the Search and Selection Committee is looking at, in which, remember, T.S. Vijayan is part of the committee along with the NRC committee, and he's also now a board member. From these 5 candidates, 3 will be shortlisted and then sent to the board, which is going to be meeting tomorrow. They will ratify these 3 names before they send it to the RBI. Also, tomorrow's board meeting is going to be important because a new chairman for the board of Yes Bank will be named after Ashok Chawla put in his papers just a couple of months back. Remember, there have been a spate of resignations. 3 directors have resigned, including Ashok Chawla, R. Chandrasekhar and Vasant Gujrati. 1 independent director has been replaced with Mr. T.S. Vijayan of AIDA now joining the board, and 1 more new independent director will be named in tomorrow's board meeting.
Okay, so that's going to be top of mind from a market perspective. Ritu, thank you very much for that. So that is yes for you. Markets, of course, continuing to move ahead strongly. We highlighted the indices, etc. And we're going to talk about stocks as well in a bit from now. But the uncertainty surrounding the state elections and RBI governor are behind us. The Congress has emerged victorious in the 3 big states of Madhya Pradesh, Chhattisgarh and Rajasthan. We also have a new RBI governor, Shaktikanta Das. To put all of this into perspective and discuss more, we have Indraneel Sengupta, India economist at Bank of America Merrill Lynch, who's joining in. Indraneel, thank you very much for your time. Appreciate your joining in on a day like today. First up, let's just go straight to the new appointment at the RBI. stock market types are expecting that there will be a regime change in terms of easier liquidity and a softer touch as far as rules and regulations go for the banking and financial services space. Is that a fair expectation to have? Or you think, it is unlikely that we'll see that?
Well, we think that the first priority at this point is to diffuse the liquidity crunch that we are seeing. And therefore, the RBI has already begun to OMO. We expect it to step up OMO to 50,000 crore a month in the March quarter. So that's one. Number two, there could be some relaxations, whether it is in the PCA framework, whether it is in terms of, delaying the CRAR effective date. That we have to wait and watch. But clearly, the first priority now should be to improve the liquidity situation.
Indranil, hi, morning. What are the steps that you think that the RBI needs to probably take immediately in order to ease the liquidity situation further?
Well, I think, the OMO has started, and, we think that it has to be higher in the next, 3 months in the March quarter to about 50,000 crore, especially if we do not see a meaningful return of FII inflows. And then the others are, of course, more structural.
Okay. The other point of view which is emerging at this point is because after the state election verdict, there's a fear that maybe the current government could probably get a little more populist and probably focus its energies towards the agrarian crisis a little more. Do you see that as a fear to maybe as a risk in order to assess where exactly the fiscal deficit would probably come in at for FY19? Is there a risk emerging to those levels?
Well, let me say that, we are looking at a fiscal deficit overshoot to 3.7% of GDP. That said, we think that, this deficit will be made up by drawing down the centre's surplus with the RBI, which, if you look at last year, was almost 1,60,000 crore. As we go towards elections, we think that there will be a step up in farm loan waivers. We are looking at $40 billion of farm loan waivers by May versus, $25 billion odd now.
Okay, that is you're saying you're expecting farm loan waivers to reach $40 billion as compared to $25 billion, which have already been announced. This is, $25 billion over what period, Indranil?
By May.
No, $25 billion from starting when till now? What is the start date?
Whenever it started till now,
okay,
we have done about 25 billion.
Okay.
We've seen about 25 billion.
Okay, under this government, basically, since 2014, basically. Yeah. Okay.
Yeah.
Okay. And any idea in terms of, it's of course, it spoils the credit culture and all of that, but from a bank's perspective, right? If a loan is not recoverable and the government is saying, well, we'll waive it off and we'll make the loan good. Net, how does it balance out?
So for the bank, it's technically all you're doing is replacing a risky loan with a GSEC, right? So it's not a liquidity, it's a liquidity neutral transaction, I would say.
Indranil, what's your sense in terms of monetary policy? The view which we've got since last evening is that because there is an MPC in place, there's not much of an expectation in terms of the new governor probably exerting more influence when it comes to monetary policy because it's handled by an MPC. So is that the view you share as well? And what's your expectation from policy rates in any case?
So we are looking at a 25 basis point cut either in February or April. As you would recall, we had actually had a cut for this year. Of course, we saw hikes, but inflation is down to 2.8% now, probably today, and will stay very, very benign, at least for the next few months. Growth is slowing, partly because the liquidity crunch is aggravating base effects. And global growth itself, as a house, we think is going to slow. So I think that any which way you cut it, there is the strongest possible case for a rate cut either in February or in April.
But there's no change in your expectation with the new RBI governor, correct? I mean, it just stays as per what your expectation was.
No. This we have been saying for, this we have been saying for a while that, that there has to be a rate cut. There should be a rate cut, either in February or April.
Indranil, so for now, markets are cheering on, and financials are doing okay. So there is no, although news flow has been pretty frantic, market reaction has also been volatile, but net we've been okay. But as we go forward, easier liquidity, which may be needed, is fine. Rate cut, as you say, you've been expecting, and you say it's needed. Well, that's fine, but that against talk that maybe institutional credibility has been compromised. From a foreign investor point of view, how is this being taken? I mean, what kind of conversations have you had? Or people, I mean, FIIs aren't really bothered. Yeah.
No, I presume FIIs are also looking at the same macro conditions. So they are also seeing that liquidity is super tight, that is affecting growth. There is a, inflation which is going down. So why should reacting in the most obvious fashion, be any differently viewed?
No, I'm talking about the change which happened.
It's a fact of the matter, right? That inflation is lower.
Absolutely. I'm just saying the manner in which the governor quit because of disagreement. I'm just saying, I mean, from an institutional perspective, does it make a difference at all? You may disagree or agree with what is needed.
No, I think, we are all looking at... Yeah. So I think, what all we are saying is that, we are looking at all of us, I guess, in the markets, look at macroeconomic conditions and expect a policy response to that macroeconomic condition. And right now, when you see slowing growth, when you see falling inflation and tight liquidity, you think that, there should be a rate cut, there should be OMO.
Okay. We have the RBI board meet on the 14th. That's at the end of this week, and expectations are that it could probably just be a bit of a warm-up kind of board meet, and no big issues would be taken up. What's your expectation in Indranil?
No, I have no comment on this.
Okay. All right, Prashant, any more questions?
I think that's it for now. Indranil, thank you very much. Appreciate you joining in, and it's great chatting with you as always. Appreciate your time here. Okay, that is Bank of America Merrill Lynch. I think the one statement which stands out is that their estimates for farm loan waivers now are for $40 billion worth of farm loan waivers, and as of till now, there have been about $25 billion worth of farm loan waivers which have been announced. So there's a step-up increase which Indranil is expecting, which Merrill is expecting till May of 2019, essentially going into elections. So that is what we are looking at. We take a very quick break here. The markets, cruising along. We've got about 120 odd points right now. Financials are doing well. Auto stocks are doing well. Real estate index is okay.